Good morning, students. Welcome back to the class. My name is Mohammad Rab Sohail, Faculty of School of Finance and Commerce of Galgotias University. This is the third lecture of financial accounting. Today I am going to discuss important topic, that is accounting process and accounting conventions. Right. Students, in the previous lecture, I have already discussed users of accounting information and accounting concepts in detail. Right. The objectives of this class are as follows. Number one, to familiarize with the process of accounting. Second objective of this class, to familiarize with the accounting conventions. Third objective of this class, to apply the acquired knowledge in the corporate world. It is very important for the students. Whatever the students are learning in the classroom, they must apply these theoretical knowledge in the corporate world, right? Students, this is the introduction part. As you know, every organization enter into a number of transactions during its course of business to achieve its objectives. These transactions affects its assets and liabilities. Accounting process is the complete sequence of accounting procedures which begins with the recording of business transactions from sources of documents in the journal. There is no doubt that rules and guidelines are necessary for recording the business transactions to bring some uniformity in the preparation and interpretation of basic financial statement, namely profit and loss account and balance sheet. Right. Accounting conventions is a rule or an accepted methods or procedure or a statement of practice which is adopted either by general agreement or common consent, which may be in writing or implied. Right. Students, now I'm going to explain the meaning of accounting process. Right. As you know, guys, accounting process is the complete sequence of accounting procedures which begins with the recording of business transactions from source documents in the general purpose or special subsidiary books. As the case may be, and with the preparation of two basic financial statements, namely that is profit and loss account and balance sheet. In case of limited liability companies, the cash flow statement is also prepared. The main purpose of accounting process is to record all the transactions systematically without missing an entry. Right? I hope it is clear to everybody. Students, the first step in accounting process is analyze the business transactions. The steps of transaction analysis are as follows. Ascertaining the accounts involved, ascertaining the nature of accounts involved. You have to identify the whether it is a real account or nominal account or personal account, right? On the basis of that, you can apply the golden rules. For example, if it is a real account, then the rules will be what comes in debit, what goes out credit. And in case of nominal account, expenses losses always debit, and income gain is always credit. And in case of personal account, receiver is always debit and giver is always credit, right? So it is very important. Ascertaining the nature of account is very important, right? So that you can apply the golden rules effectively, right? Guys, so this is the second step of accounting process, that is generalize the transaction. What do you mean by generalize the transaction? Generalizing is the practice of documenting a business transaction in accounting records. Record keeping, especially for accountants, is a detail-oriented skill that requires commitment. Every business transaction is recorded in a journal, also known as Book of Original Entry, in chronological order. Here I have shown the format of journal. Journal. First of all, you have to write the date, then particular, then ledger folio, then debit, then credit. In this format, you can write, you can post journal entries properly, right? This is the best format of journal, right? Now I'm going to discuss the third step, that is post to the ledger account. Guys, after the transactions are recorded in the journal, it is then posted in the principal book called as ledger. The process of transferring the entries from journal to the respective ledger accounts is called ledger posting. Balancing of ledger is carried to find out difference at the end of the year. This process is carried out throughout the year, and at the end of the financial year, the ledger accounts are closed and are totaled and balanced. This process is called the balancing of the ledger accounts. Right. Now I'm going to explain the format of the ledger, how you have to prepare the ledger. Right. This is the best format of the ledger. Right. First of all, you have to write the date, then particular, then journal folio, then amount. Again, write the date, particular, journal folio, then amount. Right. This is the best format of the ledger. Right. I hope it is clear to everybody. Students, now I'm going to discuss the step number 4 of accounting process, that is preparation of trial balance. What do you mean by preparation of trial balance? Students, a trial balance is a statement that shows the total debit and the total credit balance of accounts. The total of debit amount shall be equal to the credit amounts. Thus, it verifies the arithmetical accuracy of the posting in the ledger accounts. Right. Now I'm going to explain the format of trial balance. Right. This is the format of the trial balance. First of all, you have to write the closing balance of the individual account. Right. And then you have to write the folio, and then you have to write the debit amount, then you have to write the credit amount, and it is always equal. Debit amount, total of debit is always equal to the total of the credit, right? And the trial balance check the arithmetical accuracy of the posting in the ledger accounts, right? I hope it is clear to everybody. Now students, I'm going to explain the fifth step of accounting process, that is recording adjusting entries. What do you mean by adjusting entries, guys? Adjusting entries ensures that the revenue recognition and matching principles are followed. To find the revenues and expenses of an accounting period, adjustment are required. Adjusting entries are required to be is because a transaction may have influenced revenues or expenses beyond the current accounting period, and to generalize to the events that not yet recorded. Right. This is the fifth step of accounting process. Now I'm going to explain the sixth important step of accounting process, that is prepare the adjusted trial balance. Guys, an adjusted trial balance contain all the accounts, titles and balance of the general ledgers, which is created after the adjusting entries of an accounting period have been posted to the accounts. It helps to create the income statement and balance sheet and provide enough information for the preparing the cash flow statement. Right. I hope it is clear to everybody. Now the seventh step of accounting process is prepare the financial statements such as profit and loss account, balance sheet and cash flow statement. Guys, financial statements are prepared from the balances from the adjusted trial balance. The financial statements are made at the very last of the accounting period. Financial statements include profit and loss account, balance sheet, cash flow statement. Right. Here I'm going to explain the format of profit and loss account, how you can calculate the net profit or the net loss, right? First of all, you have to take the total income, right? Then you have to do the total of expenses. Then what you will do, guys, you have to subtract the total expense from the total income. Then you will get a net profit or net loss, right? Clear? It is clear to everybody? Okay. Students, here I'm going to explain the format of the balance sheet and the cash flow statement. You know, guys, I have already explained you what is the main motive to prepare the balance sheet. As you know, balance sheet shows the financial position of the company, right? So here I can explain. I'm going to explain how you can prepare the balance sheet or the balance sheet of the company. First of all, guys, you have to write the name of the organization. Then you have to write the balance sheet. Then you have to write the date, right? Then this is the format. And here you on the liability side you have to write a capital fund, and in capital fund you have to add the surplus, or you can subtract loss. Then you write the subscription received in advance, or outstanding wages, outstanding salary, long-term liabilities, or the short-term liabilities, right? On the other side, asset side, you have to write the fixed assets, like a building, right, a furniture, and you can show the current assets, like current assets also, like debtors, bill receivable, cash in hand, right? And you have, whenever you do the total of assets and the liabilities, it is always equal, right? And now I'm going to explain the cash flow statement. You know, cash in cash flow statement there are three activities. Number one, operating activities. Second, activities is investing activities. Third is financing activities, right? By preparing the cash flow statement, you can find out uh, we can find out cash flow from the operating activities. You can find out the cash flow from the investing activities. You can find out the cash flow from the financing activities, right? Now I'm going to explain the eighth step of accounting process. Eighth step of accounting process is post closing entries. As you know, students, at the end of an accounting period, closing entries are made to transfer the data in the temporary accounts to the permanent balance sheet or income statement accounts. Transferring the balances of the temporary accounts or nominal account, example revenue, expenses, and drawing accounts, to the owner's equity or retained earning accounts is used because these types of accounts only affect one accounting period, right? Ninth step of accounting process is prepare a closing trial balance. What does it mean, guys? To make sure that debit equals credit, the final trial balance is prepared as the temporary ones have been closed. Only the permanent accounts appear on the closing trial balance to make sure that debits equal credits, right? I hope it is clear to everybody. Guys, there are four main accounting conventions which are as follows. Number one is conventions of disclosure. Number second is convention of materiality. Number third is convention of consistency. Number four is convention of conservatism. I'm going to explain these accounting conventions in detail in the upcoming slides, right? Students, first accounting convention is convention of disclosure. What does it mean, guys? Convention of full disclosure suggests that every financial statement should fully disclose all the relevant informations that affect the average investors. Full disclosure means that there should be full fair and adequate disclosure of accounting information. Guys, the secret reserves and profits should not be made, right? The actual facts should not be presented in the final accounts so as to present true and fair amount, so as to present true and fair view of the enterprise. Guys, the rationale behind this convention is that the financials are used by external users who make important decisions on the basis of information contained in them. Hence, the financial statements should state all the material facts which with as much information as possible. Exclusion of material facts make the financial statements not only the incomplete but also unreliable, right? I hope it is clear to everybody. Students, the second important accounting convention is a convention of materiality, right? Guys, the conventions means that in accounting only important and relevant information should be provided to the users of financial statements. Any item or information which is material or important should be included in the accounting statements, and whatever is not important should be ignored. An item should be regarded as an important if it can influence the decision of the stakeholders or investors. In order to make financial statements more meaningful and to minimize the cost, accountants should report only such information which is material. Thus, this convention emphasizes on avoidance of immaterial and useless information. The rationale behind convention of materiality is that if material as well as insignificant business transactions are involved in the books of accounts, the accounting records that will be burdened with unnecessary details, right? Students, third important accounting conventions is a convention of consistency. What does it mean, guys? It implies that same accounting policies should be used for similar items over the years. It means that accounting information is useful only if it can be compared with the similar information within the same firm for few years and with similar information between two or more firms for the same period. This concept says that frequent changes in accounting treatment would make the balance sheet and income statement unreliable for the end users. But this does not mean that they cannot make changes in its accounting policies. If it wants to influence any changes, it may do so. However, such a change should be reported in its financial statements and its effect on income statements and balance sheet should be shown separately, right? Students, the fourth accounting convention is a convention of conservatism. What does that mean, guys? Let me make you understand in a layman language what is the actual meaning of convention of conservatism. Guys, conservatism is a policy of playing safe in the world of uncertainties, right? It emphasizes on evaluating forecasting risk and uncertainties present in the business to ensure that reasonable provisions are made for anticipated losses and expenses. Anticipate no gains but provide for all possible losses. This means recognize all losses that have incurred or likely to be incurred and to admit the gains only when they have been realized, right? I hope it is clear to everybody. Students, on the basis of the lecture, these are the practice questions for you. First question is, what is the process of accounting? Question number second is, what are the accounting conventions, right? These are the references from where I have taken the content, right? Thank you, students, for listening my lecture very patiently. Thank you so much. Thank you.